Hello, everyone. Welcome to another episode of the Crypto Collaborative Podcast.
What's up, Crypto Collaborative?
It's a bit more forceful than I would have.
Yeah, happy Saturday.
Casual Saturday.
It's a casual Saturday.
We talked a little bit on our other channel.
Sponsored by Waterloo.
We talked a little bit on our other channel, our main channel, about Casual Saturday. We're recording this on a Saturday, so it's a little bit of a casual day today.
Casual day.
But today we've got something very casual to talk about for our viewers, don't we?
We do?
Just a little bit.
What are we talking about today?
The wonderful world of compliance.
Wonderful world of compliance. And why can't you do digital assets and crypto at your broker-dealer?
It's so casual, I can already feel everybody falling asleep.
Yeah.
No, but it's an important topic.
It should be.
Mm-hmm.
I mean, okay, so if I bought the S&P 500 3 years ago, I would have been up probably about 60% year, over the last 3 years. But if I bought Bitcoin 3 years ago, I'd be up 600%. So if you're an advisor and you're not doing crypto, this is the year you get fired.
Pretty much.
It's a done deal. Digital assets are a done deal. Blockchain's a done deal. So now you have a big problem from a compliance perspective because you can't do it. You don't know how to do it. It doesn't fit into your current model. And now you're scrambling to figure out how to do it.
So in what way does compliance tend to get in the way in most of these cases?
Most compliance departments don't even know how to read the regs. It's a sin. And that's why Commonwealth going out of business and selling the LPL was just a nail in the coffin for the broker-dealer space. Commonwealth, I would say, was the last place in the broker-dealer world that, like when I was there, we were specifically tasked across the board with never telling our advisors no. If an advisor, obviously within reason, by the way, but if an advisor wants to do it, how do we do it? Right? That's why we were first to market being fiduciaries and ERISA fiduciaries, because we read the regs. Most compliance people get hired and they just tell advisors no.
Client comes to you and they say, hey, I need you to jump. You don't say no, you say how high.
Yeah. We're not talking about doing anything illegal here, right? But
yeah.
Here's the point. You can't do crypto because your compliance people don't understand it. They don't want to, but now they're going to get forced to. But the problem is their solution is still going to be traditional finance. And traditional finance, as we've discussed ad nauseum, is over. Traditional advisory work and financial planning is over. The math is wrong. It doesn't work. Everyone's awake to it. So $124 trillion will be leaving the older generation that financial planners and advisors have built their entire livelihoods around. And it's going to the next generation that wants nothing to do with it. For example, helping an advisor work on a case where their client made $27 million on a tokenization project. Okay, so we should diversify, run a financial plan for you, and invest your money. And the woman absolutely laughed. She's like, I made $27 million, I can make another 50. She doesn't want your investment model. She doesn't want stocks, bonds, and cash.
It's almost like it was...
The next generation doesn't want stocks, bonds, and cash.
It's almost like these fancy papers were written by ChatGPT.
Right.
They probably are these days.
And the biggest trend now, and this is what most advisors don't understand because they're all dollar-centric, is your dollar is going away. Bye. See you later. So everything you base your life on, and revenue, by the way, because you're paid in dollars, is going away. It's worthless.
Mm-hmm.
Right? Banks don't have reserves. There's really about $20 trillion in assets. But the financial paper on top of it through rehypothecation is about $100 trillion worth of debt is issued on $20 trillion worth of assets in this country. And they're now going to print money to eternity.
So what would you say
if you're out there as an advisor, you're like, oh yeah, I'm making money in my portfolios. No, you're really not.
Okay. Yeah.
You're not. You're not making any money. Just take the S&P 500, divide it by the amount of money printed, and you'll realize that you have negative growth.
So, what would you say a compliance department in where we are going in terms of finance? What does a compliance department need to be to keep up with the way that these industries are going?
Yeah, so, okay, you're an advisor, right? Why should I listen to Tim Nihill? Well, I worked in the back office, built a back office, and I also have a 24, right? I'm a compliance and officer, supervisory officer. So I am compliance. So what does my compliance need to be in the future? My compliance needs to be advisor centric and client centric. And I have to read the regs. And it's very easy. It's not difficult.
Yeah.
Right? And the great news is most compliance departments I can replace. Right? We have our own proprietary technology and compliance. We don't need a huge department of 20 people. Like, I could use technology to read the regs for me.
Mm-hmm.
And I could tell it and teach it how to properly read the regs and how to interpret it.
Yeah.
So,
It's the same. It's the same.
compliance departments now have to deal with the fact that
Yeah.
the traditional investment game is over. People want private assets, private investments. People want out of the public markets, and you have to you have to reread the regulations.
Yeah. I mean, that's exactly as pretty much what I was gonna say. Yeah. Like it's the same as what you were just saying earlier about advisors, in the sense that the mindset is shifting from no to how. Compliance departments need to, and in some cases are, but in most cases need to make that shift as well.
But the problem is they're trying to solve a new world problem with an old world response.
Yeah.
So you have to do digital assets if you're an advisor. You have to be fluent in them. And most importantly, you have to figure out how to secure them. How do you secure Bitcoin, for example, XRP, Ethereum, Solana, Cardano, all the way down the line? How do I secure this for my client? Because it's an asset. It's not an investment. It's an asset. This isn't an allocation. The financial advisor community is going to respond through an allocation to an ETF, and guess what? The next generation who is getting all the money want nothing to do with an ETF.
I think the dog doesn't like that comment.
I don't think Diggs likes that comment either.
Is he working for the traditional platforms?
Yeah.
Diggs, are you with Vanguard?
You working for Fidelity? And the other thing too is advisors have pigeonholed themselves. They don't make enough money. Most 401k advisors put themselves out of business, and most financial advisors have put themselves out of business. They don't know it. Because instead of providing value, they've underpriced and sold strategy and legacy platform. Oh, I can manage your account and run a financial plan, which, by the way, is mathematically and statistically wrong, and I'll charge you 1% for it. Versus, hey, I'm going to double your net worth every 3 to 5 years. Pay me 5%. Right?
Mm-hmm.
So you have advisors are selling Toyota Priuses when they should be selling Mercedes-Benz and Bentleys.
Yeah.
So money's going back to that world where financial planners that don't adapt are out. I can easily replace your e-money and financial planning software and Money Guide Pro. I can replace that with ChatGPT in a heartbeat, and it'll be way more accurate. You have another generation of new wealth that wants nothing to do with dollar cost averaging and asset allocation because they know it's garbage. You're not doing anything for people. People are waking up to the fact that their dollar in the last 5 years, the value of their dollar and purchasing power has decreased by 97%.
Mm-hmm.
And now the escape valve from this debt-based system that everybody's been living off of, which is completely falling apart, your escape valve is crypto. And 99% of advisors can't do crypto because their compliance departments won't let them, and because they don't take the time to understand what's really happening and how money really works.
Mm-hmm.
Like you said, a lot of advisors are ex-wholesalers. They're product pitchers. They're salespeople.
Why do you feel like a lot of these compliance departments don't let advisors do crypto in the first place?
Because it's new for them. They have to actually do their job.
So basically, they just haven't been bothered to vet it yet.
Right. Which is insane. Like, how have you not figured this out yet?
It's been how many years since it's been
The SEC,
mainstream?
The SEC, in a bulletin, gave broker-dealers a 5-year stay of execution. We won't prosecute anybody for getting into this space, but we're going to give you 5 years to figure it out. No one reads the regs. So, as an advisor, with the people that know and the people that are getting the wealth and inheriting the wealth, you're going to be in the digital asset space whether you like it or not if you want to be relevant in 5 years.
Why do you think people tend not to read the regs? Because you just mentioned, we both mentioned, like, they're not hard to extrapolate.
Listen, compliance isn't something that everyone understands. It's, like I said, a lot of advisors are out there, they're salespeople first. They're not compliance people, right? And a lot of the way things are structured in the asset accumulation game is you're there to sell an idea. I'm selling you an idea that this financial plan is the greatest thing since sliced bread. And it doesn't, Bitcoin destroys financial planning. That's why I said, like, advisors, you're being benchmarked to Bitcoin now, not the S&P 500. Right? Even Tony Robbins is coming out and crapping on financial advisors and 401ks, which is their livelihood based on asset-based revenue.
Mm-hmm.
I got to accumulate as many assets as possible and charge 1%.
Yep, we mentioned in our other channel on the other podcast that we put out today, just this whole, I think it was you, you did like a whole rant about just how awful the concept of retirement is in today's day and age. So definitely
retirement is a concept that was made up by financial organizations like Ameriprise and Fidelities and BlackRocks of the world to gather assets and charge fees.
So definitely go ahead and check that out if you're interested. But
so
my God.
The fact of the matter is, as an advisor, you have to adopt. You can plug in the ETF to start, but it ain't going to get you where you need to go because you have to own this asset. And this creates the challenge because from a regulatory perspective, in a world that was primarily based on SEC and FINRA-based regulations and compliance, you now have to take into account that it's a commodity. Most of crypto it's commodity, not security. So then you're actually dealing with a real asset, which means that you have to treat it like physical silver and gold, right? Like for people that we know is that have this experience over the last 5 years, is it better to own physical gold and silver or to buy paper gold and silver through your ETF? And the answer is physical gold and silver. You need the asset. And the future when there is no dollar and there's only Bitcoin and crypto, and the people that own crypto and own the asset understand that they can use it as collateral for themselves, so now they become their own bank, right?
Mm-hmm.
Now everybody's a family office and now they're their own bank. They don't need banks anymore. They don't need traditional financial products anymore. It's a decentralized financial setup. And financial planners and advisors and the entire industry is a centralized system. And people don't want the centralized solutions anymore.
So with all that being said, we've talked a lot about, how advisors can get into that whole transition. We've talked a lot about that in past episodes.
Yeah.
I'm kind of wondering, how can compliance departments get into that transition? Because if they don't, then they're just going to be useless and just replaced, as you just said.
It depends, right? Like, the smaller firms that can be more nimble will have a leg up over everybody else, right? Because they're going to have to figure out how to fit it in from a compliance perspective, a custody perspective, and all that stuff. People at the larger shops, especially like the Morgan Stanleys, the LPLs, the Bank of Americas, they're going to have to develop in-house solutions, but by the time they get it out to everybody, it's going to be way too late, right? And there's an offshoot to this too, because it's not just the fact that you have now as an advisor, you have to figure out how to integrate and add crypto to your offering.
Mm-hmm.
And now you're learning that the ETF isn't going to save you because your clients actually have to physically own the asset. The third part of that is, okay, the extension of that is I don't just want to have exposure to crypto. I want to take my traditional equities and I want exposure to this space too. So how do you build out your equity, both public and private sleeves, in the crypto space?
Mm-hmm.
And this is an allocation that this is an asset class that will take 10 to 20% of every dollar out there, at least.
Yeah.
Maybe more.
So these departments are just going to have to, they're going to have to get with it, they're going to have to just not exist anymore, pretty much.
Yep. It's
Same way as advisors.
It's get with it or get out of business.
Just in general.
Yeah.
But I think that works well in a way just because if that's a priority for advisors and also compliance departments, then in the future you're going to have that sync where both of them have made that transition.
Right. And I mean there's a massive amount of work that they have to put into it because it's a whole new language, it's a whole new asset class, and you have to figure out custody, and then you have to figure out the protection side, right? Like, forget coverage from an E&O perspective on the insurance side, because that's now happening, but for getting into this space. But think about it as an investor, right? So if I'm a crypto person and I have, let's just say $1 million worth of Bitcoin, right?
Mm-hmm.
Which isn't a lot. I'm not going to put it in a Fidelity account. I'm not going to give it to JP Morgan Chase. I don't trust them. Right?
Yeah.
And then your FDIC coverage and your SIPC coverage, what happens if they screw up and they lose my Bitcoin? Well, I'm not protected because you can't insure the account value is high enough. This is a big, big problem that people aren't realizing. This is a tidal wave. So from a compliance perspective, you have to figure out the entire thing, soup to nuts. Not just how you fit it in the new regulations that are here and coming out, but also dealing with FINRA and the SEC and the CFTC. Then you have to figure out how you're going to custody. Then you're going to have to figure out how you protect it.
This one does not want you to keep going. He's definitely working for Vanguard.
Yeah. And then from there, you have to be able to handle decentralized finance. And the industry is centralized finance. It's set up to make the banks and financial institutions money. And crypto is anti-money from that perspective.
Mm-hmm.
It's anti-centralization. There's a centralization and then there's a decentralization in the blockchain world. Mm-hmm. And people are going to get to pick and choose. What game do you want to play? Right? Do you want to play one? Do you want to play the other? Or do you want to play both?
Exactly.
Why not have both? Because why not? So forget about the fact that, forget about the fact that the compliance departments, and we're speaking with a lot of them, that it's not that the appetite isn't there. They just have the point of view that they haven't changed their perspectives on. And they have to change their perspective on the fact that your dollar is not going to be there anymore.
Do you have some, without naming names obviously, do you have some especially interesting stories from the conversations you've had with compliance departments?
Yeah, I think the funniest ones are always the ones where people are like, well, I wanted to hate you coming in because I don't want to talk about this crap. And they walk out laughing like we're best friends because they're like, yeah, I understand you're totally making a ton of sense. And I tell people too, like, it's nuts that I'm talking about this stuff. 5 years ago, I never imagined I'd be talking about this stuff all day long and that advisors would be calling us to help them figure out their solutions or just outsource it.
Yeah.
Like, yeah, people are sending clients to us so we can do this for them and do it in a safe manner. So then, yeah, out of the you have the crypto side, but then it's like, okay, how do I build, portfolios that have exposure to these assets? Like, how do I integrate the micro strategies of the world and the preferred stocks that are coming out in the different companies? New payment systems, right? You're going to have all new rails on finance and banking. So who are the companies that are going to be providing the new rails? How do you invest in them and how do you own them? It's not just owning their token, right? And then from there, you're going to watch the entire financial institution world move over to, XRP and Ripple and Solana and Ethereum, where tokenization is already happening.
So here's a question. I think a lot of
and it's going to be a flip of the switch.
Oh yeah.
This isn't going to be this is going to take time. This is going to take no time at all. You're going to see hundreds of trillions of dollars go to the blockchain like that.
But here's a question I think a lot of advisors are kind of wondering. Because it's one thing to say how compliance departments are going to change and how they're not really reading the regs currently.
Yeah.
But a lot of people may not know or may not know to a detailed level sort of what exactly is going to change as far as regulatory speaking. People have heard a lot about the Genius Act and the Clarity Act and those types of bills and what those are going to do for the way finance works in this country and around the world. What can you say about those and the effect that those are going to have on just how the advisory business is done as a whole?
It's going to change it completely. If you're an advisor, what are you going to do when the market's open all the time? There's no limit on trading. There's no open close. I could trade anywhere, anytime, across the world, settle and move cash instantaneously. What is going to happen when your entire world becomes lightning fast?
So it's really applying. So these bills really apply the principles,
right? And like if you follow Tim Draper, for example, he's already saying the integration between artificial intelligence technology and Bitcoin, for example, has already happened. There's no more middleman. There's no more U.S. government. There's no more bank. The middleman is gone. And as a financial planner and financial advisor, you're a middleman. Most advisors are middle people for platforms. You're selling product. You're not actually doing wealth management. That's what most advisors don't understand. You don't manage wealth. You're selling a product and an idea.
Mm-hmm.
And financial planning is mathematically wrong. And the next generation understands this. It worked for the boomers. It's not going to work for anybody else anymore.
Mm-hmm.
And you'll have those that'll die on the hill. But it doesn't matter because in 5 years you won't have a U.S. dollar. How hard is that to conceptually understand?
I think for a lot of people it is definitely hard, which is funny. I mean, we've been saying it in a number of different ways, but I think it's just so jarring, know?
Right. I don't need a bank. I can send payments to anybody I want. I could use digital assets to do it. It happens at the speed of light, and nobody knows what I'm doing. And they shouldn't, because it's private. This is the United States. This isn't communist Russia. What I have with my money is my money. What I do with it is mine.
It's not even a country thing anymore.
And people are also waking up to the fact that their money is not in the bank.
Mm-hmm.
Go pull out $30,000 from the bank now. And I guarantee you that bank won't let you take out 30 grand.
Not only that, but it's not even a country thing anymore, really. I mean,
it's international now.
The principles of decentralized finance are being applied to, just everything as it relates to how society functions within itself. If you look at, you said people are waking up to that in particular. People are also waking up to the fiction that is the concept of a country to begin with. I mean, obviously there are, certain regulations in certain places and whatnot, but even those are going away and those are intertwining, as you mentioned. But it goes to a more macro level as well. Like, people are less and less labeling themselves based on, I have a document with my picture in it that says I belong to this area.
Yeah, people are waking up and there are no borders, boundaries, and limitations. And I mean, when I was growing up in the 80s, you were wealthy if you were a millionaire. Today, you have $1 million, you're middle class. You're not wealthy.
Mm-hmm.
So the whole money metric has completely changed. And the next generation and wave of wealthy people, especially those that got wealthy in the digital asset space in this new asset class, they don't want traditional finance. They don't want traditional financial products, and they don't believe in financial planning. So yeah, if I'm out there as an advisor, I'm pretty concerned. And I'm sitting across the table from a lot of advisors that are waking up and realizing that financial planning is BS.
So here's one thing that I think we can kind of cap off on. I'm wondering, probably what's the best way to articulate it, but obviously we help the firms that we work with a lot with a variety of matters as it relates to the decentralized and digital asset space. What I'm kind of wondering is, what do we do, and what can you talk about in terms of what we do in regards to navigating the way that compliance is changing?
Yeah, I mean we're talking with a lot of different compliance departments in various areas, but here's the reality of it. You don't have anyone out there that can talk about this and fit it into the framework and the mindset of being from the back office and the broker dealer side, right? I'm unique. I'm not saying that to be arrogant, but I am. Like, there's nobody that has my background that worked in the broker dealer space that brought new solutions out there that understands this and how to fit it in from a compliance perspective. Right? In fact, I left the broker dealer space because the broker dealer space is gone. They're going out of business.
Yeah.
Broker dealers are over. Commonwealth going to LPL was the nail in the coffin for the BD space. So now we're talking with advisors twofold. We'll help your BD adopt and adapt, and we can help you build it in-house, or you outsource it to us.
Whichever works.
Whichever works. We're fine with it. We've been doing this a long time now, and we have more than a 5-year track record, which no one else has. So there's another reason. Why us? Well, no one else has done this. We have. Been doing it for a long time now. So we're helping develop the solutions and getting compliance departments to adopt, with the understanding of, here's how you can look at it from a traditional perspective and fit it into your traditional accounts, and here are some ways that you can adapt and try to get into the real asset side. But it's very similar to physical gold and silver, which most compliance departments want nothing to do with that too. And that's why a lot of this will be done through OBAs. And that's why a lot of advisors will start breaking up with their broker-dealers, because the broker-dealer system is completely outdated. And that's the reality of it. Because as an advisor, if you don't have 50% going to private equity, alternative investments in crypto, you're out of business. This is the year you start losing assets as an advisor for not doing this. Mm-hmm. And it's a done deal. I don't have to, it's not even a debate, it's over. They're going to look at the outlays of what they're going to do with the US dollar. It's over. The empire's fallen. No one trusts the banking system. United States is broke. Look at all the fraudulent programs that are happening. And the people that have the money going forward are decentralized, they're private, and they're off the grid.
Yeah, I mean, what else can you say? Like, especially off the grid. I think that's the biggest one that a lot of people sleep on, but a lot of the people that really do have, lots of money are off the grid. And
when I say off the grid too, I don't mean like you're going to rent a camper and go live in Montana. Like, I'm talking, I'm billionaire level, you can't touch me, and I got my boat and private jet, I'll do what I want.
Yeah.
Like, you look at the nomad capitalist and why they have such a big following. Wealth is not staying in the United States anymore because it's no longer safe here.
The wealthiest people don't really, I mean, they may have like one or two citizenships, but
you have to now.
Like, you're not really going to be affiliated.
Think about that. That's the other thing is, like, okay, when you're sitting with compliance, especially the FINRA world, you can't have your clients overseas with their money. It's too restrictive. You can't take signatures because they're out of the country and all sorts of crap.
Mm-hmm.
So the days of, that's why you're seeing like such a dichotomy in the wealth management space of like you got these really, really, really big, massive teams, and then you kind of got everyone else that's basically a banking client.
Yeah, pretty much.
So, if you're looking to get into the future of finance, you have to adapt now. You have to offer family office services. You can't just call yourself a family office and say, "Oh, my minimum's $1 million or 10 million, whatever." Like you actually have to be a family office, and then you actually have to be able to create private and sovereign wealth, and you cannot do that in a centralized system. And a lot of compliance departments, the smaller broker dealers and smaller firms are more nimble and hip to this because they're going to adapt because it's a new strategy for client acquisition.
Yeah.
Like I said on our podcast before, on our other one, did your advisor get you into Bitcoin at 10 to 20,000? No, they're fired immediately.
Mm-hmm.
That's the world that we're going into.
Yep.
We're already in it. It's just people are waking up to it.
Yep. So obviously, we're kind of shedding
Being a financial advisor and financial planner is not enough.
Mm-hmm.
You need to be a family office and you need to be an asset manager because it's going back to wealth creation.
Yeah.
So at the core of it is digital assets.
Mm-hmm.
And just do your homework, read up on tokenization of assets, just follow what BlackRock's doing because they're giving you the whole playbook.
Mm-hmm. So obviously, we're kind of sharing a little bit about, really not just the compliance perspective on it, but just the overall transition that is happening. And we've talked a lot about that in previous episodes, but like
we could take compliance departments soup to nuts on this whole thing.
Yeah, there's a whole focus on this one that I think we've definitely shed a lot of light on. I think advisors really need to pay attention to it for sure.
They're not going to have a choice.
Mm-hmm.
The entire world is going to crypto, whether people like it or not, and a lot of it's going to be out of survival.
Is it even really worth calling it crypto at this point?
No, I talk about the different.
At this point, just call it digital currency.
Digital asset.
Yeah.
Digital assets.
Because I feel like cryptocurrency, I feel like it was a label from a bygone era when it wasn't as mainstream as it is today.
No, and when my artificial AI guy or gal is doing business with someone else's AI guy or gal, well, they're going to be going back and forth and exchanging crypto. In Bitcoin, they're not going to be exchanging a dollar. So there's already a world where the dollar is irrelevant, and you're also in a world where gold is irrelevant. And that's the other thing that people don't understand, especially in the United States. Gold is irrelevant. They're gonna demonetize gold to basically try to bankrupt Russia and China and BRICS.
There are so many people I'm seeing on, especially on like financial adjacent social media these days, being like, gold is what people need to invest in, not crypto. And it's like, I think you mentioned this on a previous episode, would you rather have a ship full of heavy metal or a phone that has everything you need it?
Right. You could be sitting next to a Bitcoin billionaire at Starbucks and you would never know it.
Yeah. I think there was some dude, I might have mentioned this on a previous episode, but there was some dude recently who found a flash drive in his attic that had like 22 Bitcoin in it, and he went from being lower middle class at best to like the dude has like 2 or 3 yachts now.
And that'll be the number one mistake that people are going to make. Because he'll go to an advisor, the advisor will tell him, oh, you should reallocate and invest in the markets and cash and stuff. And he's getting rid of his most valuable asset for worthless assets.
Yep.
That's the other thing is like you have to understand that everything relative to Bitcoin is becoming worthless. And your crypto, you're never going to sell. the most important thing you can do right now is accumulate. Because at some point when there is no more dollar because it's valueless, which it already is, well, Bitcoin relative to the US dollar is worth infinity. So now I own an infinite asset, right? Like buying real estate in New York in the 1600s. My family still owns the real estate, right? But we have never sold the asset. You just keep borrowing against it because the value of that asset relative to what people are pricing it in is infinity.
Mm-hmm.
So yeah, Bitcoin goes to infinity. That's why Fidelity said one Bitcoin will be worth $1 billion. Bitcoin isn't designed for people to own one Bitcoin. It's designed for people to own Satoshis, which is basically one millionth of a Bitcoin. So you're trying to, for people that understand what's really going on, you're trying to stack sats. And no, buying it in an ETF isn't enough. And now you have custody issues you have to concern yourself with. Mm-hmm. You have compliance. It's a compliance nightmare, honestly.
And a lot of these departments are going to have to get on board or they're not going to exist anymore.
Right. And I mean, the returns are ridiculous.
Yep.
I mean, even our equity sleeves on this stuff, like, we were on a platform that had 90 different portfolios. You had your DFA models and your first trust and your custom ones and all that shit. And I built a blockchain model and a crypto model that on a 12-month period of time beat the best model on the platform by over 100%. Mm-hmm. And then I got told can't use it.
Yep. I think definitely in the future we should talk about building the right kind of digital asset adjacent models, because I think that's also something that advisors are really going to want to be interested in.
Well, I can surely talk about that because our models are proprietary, custom, and they're all driven by technology.
Oh, for sure. But in the meantime...
Guess what? I don't need an asset management department anymore.
Mm-hmm.
Uh-oh.
But, in the meantime,
Get it? I don't need a compliance department anymore. Uh-oh.
Yeah.
My financial planning software is replaced. Uh-oh. Mm-hmm. You're an advisor, man. You could be sitting on $1.5 billion, but that $1.5 billion firm is going to go to zero within 5 years. Mm-hmm. Think about that.
But in the meantime, any final comments you want to make on just the whole world of compliance as it relates to digital?
Yeah, go Bills, go Sabres.
Very on topic. It's casual Saturday. It's casual Saturday.
Like, yeah, my thing I tell people, I go, I don't argue whether crypto's going to happen or not. It's already happened. And the thing about it is the mainstream media and the news, nobody's talking about what really is going on. Mm-hmm. And that's why there's only a few of us out here talking about this, and not only talking about it, but we've done something about it.
Yep.
So if you're out there as an advisor and you don't have this solution, you better call someone like us that does.
Exactly. That's a good place to leave it off for sure. Definitely spread the word. Definitely talk to some people like us, because this is already happening. It's already here.
Some people like us. We're like one of the only ones out there.
Yeah, pretty much.
And we're the only one out there that can talk this thing soup to nuts in every facet of every firm in this country. Mm-hmm. It's like the old 401k model.
For sure. But yeah, I think we're going to kind of cap it off there.
Cheers and good luck in 2026.
For sure. Stay tuned for our next episode. I think we should talk about that.
How to build a crypto equity sleeve?
I think we should. I think people would like to hear about that. Comment below if you'd like to hear something like that. But I think we're definitely going to be talking about that sort of stuff in future episodes to come. So definitely stay tuned. Be sure to like, subscribe, and share. And we hope to see you all there. This has been the Crypto Collaborative Podcast.
Welcome to the collab.
Welcome to the collab.